tech is back because tech is working and tech is empowering the digitization of America. That's not changing. Every time we get the story that we're going to roll out of tech into value, it works for 3 or 4 days, and then we go right back to what's really happening in the economy, which is tech platform driving digitization, not only domestically, but globally. It's happening all around the world, and these companies are the ones that are empowering it, so that investment theme is going to be strong right through 2021. Now, the Russell, that's going to be interesting. If you can find companies, because the Russell itself actually has no return on assets. Most of the companies there don't make any money. But if you can find a mid-cap company that has all of its supply chain domestic and its revenues domestic, you have a company you can invest in for the next couple of years that won't be involved in the China war. Because it doesn't matter who wins the election. We're going to war with China. And it's going to have an impact on certain S&P companies. But you can find, refuge in the Russell 2000. And I think you have to do your stock picking there. And I've got one of my picks today came out of there in healthcare. But I'm now grooming with a comb, fine-tooth comb through the Russell 2000, looking for opportunities, the companies that actually make money, provide distributions, and have nothing to do with China.
Yeah. Steph, forget the value trade. I mean, is this the week that we're reminded of why we were in growth in the first place?
Well, no, it was not a good week for value or cyclicals. And I would argue that cyclicals are a little bit different than value per se. There's a nuance there, but it wasn't a good week for either of them. And I'm speechless on how every single day tech goes up. I mean, I can't explain Tesla. I can't even explain Apple, and I own that one, right?
Yeah,
so
Tesla's up 25% this week alone. 25% this week alone and 40% in the month of August.
And thank God it's not in my benchmark yet, because I would be getting hit really hard. But Apple's a huge bet for me, and so I'm okay with that. But it's the narrow market, Scott, as you're talking about. But it is the market we have. And so in order to keep up, you need to own some of these names, especially if you're playing against a benchmark, but also because the fundamentals are really, really good. Valuations aside, the fundamentals are excellent. Market shares, management teams, free cash flow, all of that I get. A lot is priced in. But let me tell you something. Let me just show you something interesting or mention something interesting. Off the lows in March, it wasn't just tech that outperformed. So tech was up. The XLK was up 64%. But the metal and mining index, the XME, was up 71% from the lows. XLE up 56% from the lows. XLI up 58%. So my point is, you have to find good quality stocks, right? That's the first thing. Fundamentals matter the most. You want to own tech because of the things I just mentioned, but you also do want to pick through some of these other sectors. And as I've mentioned, you want to have a combination of both, especially when we keep getting data. The economic data is actually really good. Those housing numbers this whole week were off the charts.
But that's being very selective, Steph. Come on, right? The housing data is good, but is the housing data reflective of the strength of the economy, or just a representative of the way people are now living and thinking about their lives for the next many years in a backdrop of low rates? Yeah. To say blanket the data is really good is not the case.
No, okay, you didn't let me finish. So housing has been off the charts. Auto sales are recovering. The consumer, there are haves and have-nots, but you saw what Home Depot and Lowe's posted this week. You saw what Walmart, Target, and Costco posted in digital sales. They've invested for the last 5 years, and as a result, they're seeing the returns, big-time returns. Kohl's, on the other hand, not so much. TJX, not so much. So there are haves and have-nots within consumer, but consumer, if you have the product, the consumer is spending. It's not perfect, and I was going to offset these positive comments by saying jobs still really stink and it's worrisome, and that's why I think you're going to get the next fiscal package. It's not perfect, and I'm not trying to say that it is, but there are pockets that are working, and those are the areas, in addition to technology, of where you want to be investing.